theory?
Maybe you've watched the videos, but yesterday we ended up here.
Okay.
Okay, so quota theory. So in quota theory, we are going to learn on the whole number prices. And these whole number prices are usually used by the market makers to reverse the market. So basically, a quarter is one of 4 equal parts of something, and quota theory now divides 1,000 pip ranges into 4 equal parts, where each would contain 250 pips, and we call them large quarters. So each large quarter will contain 250 pips, and the numbers that mark the beginning and end of each large quarter are given the name large quarter points. And we have those numbers which coincide with the major whole numbers, which mark the end of and the beginning of the 1,000 pip range. We call them the major large quarter points. And this is an example here. So I loaded only the quarter indicator on this chart, EURUSD daily time frame. So these are the major large quarter points, which mark the end on the beginning of 1,000 pip range. So this is 1.10 to 1.20. And we have now this 1,000 pip range divided into 4. So each large quarter would contain 250 pips. And the numbers that mark the beginning and end of each large quarter are termed large quarter points. And this is the major half point, which is also a large quarter point, which marks the halfway of the 1,000 pip range. So it's what is basically 500 pips. So quota theory further divides the 100 pip range into 4, and each would contain 25 pips, and we call them small quarters. And the numbers that mark the end and the beginning of each small quarter are named small quarter points, and the one that coincide with the whole numbers are called major small quarter points. So here we have an example where we have a 100 pips range. So this is 1.08 to 1.09. So we have 1.08 to 50 as 25 pips, another 25 pips here, 1.08 500 to 1.08 750, another 25. So this will make up 100 pips range. Now, quota theory to us, it offers universal, constant, and familiar price ranges that allows us to have quick and precise price analysis of any currency pair. So if at all you look at the charts, you can quickly analyze the currency pairs, because you know what the lines represent, you know what the quarter lines represent. So there's this notion that the financial markets are chaotic and market prices are random. So quota theory tends to challenge this notion that the movement of price in financial markets are chaotic and random. So quota theory is based on the premise that daily fluctuation of FX rates are not random, and the FX rates fluctuate in an orderly manner between large quota points within 1,000 pips range. So quota theory proposes that every significant price move in currency exchange rates takes place from one large quota point to the next. So you would find price moving in a gradual increments of 250 pips, which is the range between two large quota points. So it would move from one large quarter to the next. So you'll see transition of price from one large quarter to the next. So this large quarter points serves as constant support and resistance points or levels. So a bullish breakout, when you see price breaking a large quarter point. So a bullish breakout tends to find the next large quarter point above, or a bearish breakout like this tends to find a large quarter point below. So when price breaks a large quarter point like this and finds the next successfully, we call it a successful large quarter transition, a successful large quarter completion. So if we have this transition of one large quarter to another, and this large quarter price tends to complete it, then that's a successful completion of a large quarter. But we have times when price fails to complete the large quarter. Like here we had a bullish breakout, but then price failed to complete it. So if price fails to complete it, then that's a successful completion of the large quarter, and we expect price to return back to the large quarter point below it. Or if it's a bearish breakout like this, we expect price to return to the large quarter point above it. So if you look at this, this is only large quarter points, and you can see the gradual increments of price from one large quarter to the next. So EURUSD was simply completing large quarter points, and you can see all the major reversals occurred around the large quarter numbers. So quarter theory divides the large quarter of the 250 pips into 10 equal parts, and we have the each part which is called a small quarter, which is of 25 pips range. So this 250 pips range also completes in a gradual increments of 25 pips. So FX rates would fluctuate in another series of small quarter points. So it will move from one small quarter point to the next. And you would see this in lower time frames, like the 15 minutes time frame or the hour time frame, as price moves from 25 pips to the next. So here we have an example of a successful and unsuccessful completion. So here we had a bearish breakout, and we had a very successful completion of the large quarter, and immediately price reversed, and we had a successful completion of the large quarter. But here we had unsuccessful completion of the large quarter, and you can see price reversed back to the large quarter point above it. So there are times when you find this quarter prices, this whole number prices registered as high, low, open, or close prices, as price may be reversed at exact point of the large quarter prices. So, but most of the time, you would see market volatility has the tendency to conceal this large quarter point, to conceal these prices, making them difficult to recognize. As in times of high volume, high volatility, you would see price moving beyond the exact number of the large quarter point, moving a few pips beyond it, and it will produce what we call an overshoot area above the large quarter point. And in times when you find there is low volatility, or in times when there is low volatility, price tends to come in a few pips short to completion of the large quarter. So this few pips short, and it will produce what we call an undershoot area. So for example, here we had a bearish move, and the undershoot area is 25 pips from this large quarter point. So when price reversed here for the first time, it reversed around the undershoot area. So 25 pips short, reversed, came all the way, we call this the station zone, and then price went all the way back, broke this large quarter point. So we had high market volatility, and it produced overshoot area, which is 25 pips below this. And for a bullish move like this, when price reaches this 25 pips below this large quarter point, we call this the undershoot area. But here on this example, price did overshoot this area. It went all the way above this area, 25 pips above it. So it produced the overshoot area, and then price reversed. So we have what we call the station zone. The station zone is a range of 75 pips above or below a large quarter point. So the first three small quarters of 25 pips make up the station zone. So we use the station zone to identify successful or failed large quarter transition, because this hesitation zone, the end of the hesitation zone, can prove to be a difficult support or resistance level to overcome, and may prevent further progression of price beyond the range of the hesitation zone, so leading to price exhaustion, and we have what we call unsuccessful completion of the large quarter. So we also have the half point, and the half point would be around 125 pips, because it divides the 250 pips into two. So the half point is the second most important price level within each large quarter, and can also become a difficult support or resistance level to overcome, and may prevent further progression of prices beyond the half point. So this will lead to price exhaustion and unsuccessful completion of the large quarter. So we have the station zone and the half point as strong support and resistance that may prove to be difficult to overcome. So here we have, this is the large quarter point below. So 75 pips up is the station up, 75 pips down is the station down, and we have the half point right there. So honestly, most of the peaks that occur on the market, you would find them around the station zone or the half point, compared to the large quarter point. It's very rare when you find price forming a peak on the large quarter point, but it's usually in the around the half point or the station zone. So here we have price reversing around the station zone, price reversing half point. So we have learned on several terminologies and these quarter numbers. So how do we apply what we have learned on our strategy? So what should we look for in price? We should, first of all, we should expect for small price corrections and consolidations in the vicinity of each whole number. So around these large quarter points, around major small quarter points, if you see price breaking it and coming for a retest, then that should be expected. So when price breaks a large quarter point, I usually expect it to retest. And sometimes you would see the market consolidating within this vicinity. I mean, within these large quarter points or the major small quarter points for the next level move. And the large quarter points act as support and resistance levels. So close attention should be put when price reaches this level. So we look for signs of strength, and signs of strength simply means price breaking the large quarter point and having a large quarter transition. So you see price sustaining up at or above a large quarter point. And this is only possible when the market maker cycle is not completed. So when the market maker cycle is not completed, price will eventually break the large quarter point. And we should look for signs of weakness where price will fail to break the large quarter point, will be remaining below a large quarter point. And this is only possible when the cycle is complete. A break and a retest of whole number prices serves as entry points along a market maker trend. And you'd see some of my analysis showing that the market will come to retest a large quarter point and then continue up, and we'll be taking entries around this. So we add the break and the retest of these whole number prices as entry points along a market maker trend. Also, this price level can serve as TP levels. I use them a lot as TP levels because very sure that price would reach that level before reversing. And we have learned on the market maker cycle that one of the things that we should be expecting after the cycle is complete is for price to extend further, and this price extension usually have targets, and one of the targets are these large quarter points at these whole number prices. So price extensions to meet these price levels in higher time frame when the cycle is complete should be expected. So when you're analyzing your charts, when you see that the cycle is near a large quarter point, I mean, after the cycle is complete, price is near a large quarter point, you should expect for price to extend further to find this large quarter point and then reverse the market. So we have a question here and goes like this. What if prices actually breaks above or below a large quarter point and we have a transition into a new large quarter? Does a large quarter transition mean that the new large quarter will be successfully completed? Does it guarantee that once we have a large quarter transition, then the new large quarter will be successfully completed? Well, quarter theory recognizes that these large quarter transitions do not guarantee the successful completion of a large quarter. So we should monitor price behavior of FX rates within the range of each large quarter, and we should be looking for these three important price levels within each large quarter. We have the end of the hesitation zone, we have length of the hesitation zone, we have the half point, and we have the overshoot and the undershoot area, the whole number preceding each large quarter. So the 25 pips from each large quarter point. So these three important price levels may prove to be difficult support and resistance points and may prevent further price progression, causing a successful completion of a large quarter. So it's actually easy to identify if at all we would have a successful completion of the large quarter. So here we had this was a peak formation low around the large quarter point. This was GBP USD. So price formed this around the large quarter point. We had this peak formation high around the half point and the station zone. We had this as a break and a retest, but price also did retest the blue tracer here. So this half point here added to the confluence. So you can see you can put your TP around this area. Okay, so any question from the coaches?
No.
Okay, so thank you for listening. That's all I have for today.
Okay.
And we'll meet again tomorrow.